Zebec Network could be on the edge of something huge. This isn't just another crypto project promising the moon. Zebec is a real-time finance protocol, already revolutionizing how we think about payments, payroll, and investments with its continuous settlement technology. Imagine getting paid by the second, not by the week. That's the power they're building. But the real story, the one that could catapult Zebec into the mainstream, is unfolding within the halls of traditional finance. The FDIC, the very institution that ensures your bank deposits, is set to discuss a major new rule. This isn't just a minor tweak, it's a potential landmark decision that could finally build a bridge between the heavily regulated world of US banking and the innovative landscape of cryptocurrency. For years, these two worlds have been kept at arm's length. This proposal could change everything, opening the doors for official crypto partnerships. And why is Zebec perfectly positioned to walk through those doors first? Because of its focus on compliance and real-world utility, it might just be one of the biggest beneficiaries of this financial evolution. In this video, we're diving deep. We'll unpack the proposal, explore the technology, and show you why this could be a pivotal moment for DeFi. To understand how this shift could impact the future of banking, hit subscribe now and tap the bell. You won't want to miss what's coming next. In a significant development reported by Cointelegraph, the Federal Deposit Insurance Corporation, or FDIC, is set to discuss a groundbreaking new proposal. For years, a major hurdle for crypto companies has been the vague concept of reputational risk. Regulators have often used this ambiguous term to discourage banks from partnering with digital asset businesses, effectively creating a shadow ban. This has stifled innovation and prevented legitimate crypto firms from accessing essential banking services. This new proposal aims to change that by establishing clearer, more objective standards. It would limit regulators' ability to use reputational risk as a catch-all excuse, creating a level playing field where firms are judged on their actual compliance and security, not on subjective perceptions. They haven't voted yet, but this discussion is a monumental step. If passed, it could unlock a new era of collaboration between traditional banking and the crypto world, paving the way for safer, more integrated financial services. This isn't just a minor policy tweak, it could be a turning point for the entire industry. For years, banks have used the term reputational risk to avoid serving crypto businesses, even compliant ones. This stemmed from early market volatility and unclear regulations. Seeing the digital asset space as a compliance minefield, banks opted for a blanket refusal rather than developing nuanced risk models to distinguish legitimate innovators from bad actors. If the proposed FDIC rule moves forward, that vague excuse could disappear. It would establish a clear, standardized framework for how banks should evaluate and engage with digital asset companies. The focus would shift from outright avoidance to diligent, risk-based management, changing the entire dynamic. This opens the door for banks and blockchain companies to finally work together. Imagine banks securely holding crypto assets, managing stablecoin reserves, or offering seamless fiat-to-crypto services directly on their platforms. The barriers that have stifled innovation for years would finally begin to crumble. And as these new financial highways are built, the demand for a specialized, high-performance payment layer will skyrocket. This new ecosystem requires more than basic transactions. It needs programmable, continuous, and compliant payment streams. The infrastructure for real-time crypto payments will be in high demand, and that's where Zebec Network comes in. Zebec is building the real-time payment rails for the next generation of finance, enabling streaming payroll, cross-border remittances, and instant stablecoin transactions. It's not just payments, it's programmable money flowing second by second, globally. If the FDIC's proposal advances and banks begin partnering with crypto innovators again, Zebec's technology becomes a key bridge. Banks could integrate Zebec's rails for instant payroll, stablecoin settlements, and cross-border liquidity. That means more adoption, higher transaction volume, and growing demand for the ZBCN token. As regulation shifts in favor of innovation, Zebec Network could become a backbone of blockchain payments. Think billions in stablecoin transfers, streaming payrolls, and business settlements running through Zebec's rails. Every time a transaction flows, the ecosystem grows stronger. And that's incredibly bullish for Zebec's long-term value. A designer in Argentina gets paid in real time. A freelancer in the Philippines receives USDC every second. A logistics firm in India settles global invoices instantly, all through Zebec's infrastructure. Even though the FDIC hasn't voted yet, the fact that this issue is on the agenda is already a positive sign. It shows regulators are starting to recognize that crypto is here to stay. If this proposal moves forward, Zebec could be one of the key winners in reconnecting traditional finance with blockchain innovation. The FDIC's upcoming discussion might just be the spark that ignites the next phase of crypto adoption, and Zebec Network is ready to lead it. If you're bullish on Zebec, smash like, hit subscribe, and drop A in the comments, because the future of finance isn't coming. It's streaming through Zebec.